Tesla just seriously beat everyone's expectations. Based on insurance data, Tesla just had 17,000 deliveries for the last week, and one reason why this is so significant is because we have to compare this week not to this yellowish line, which is Q4 of last year. We need to compare it to this blue line, which is the previous quarter, and we are beating that quarter by a lot. This particular week and overall, we are now significantly ahead of the previous quarter in blue. The chances of Tesla beating the previous quarter and having another record quarter again in China, the odds of that happening just went up way up. This was the fourth best week of the year so far, and it is not even the end of the quarter yet, where we have more deliveries usually. Remember all of these Tesla bears saying at the end of last year that Tesla is dead in China? And remember how, for example, even some Tesla bulls like Gary just mentioned very recently, when Tesla cut prices again in China just now, that this will not add more volume. Tesla will not make any more sales after this price cut. Well, I disagreed. Who do you think was right? In all fairness, we really should wait until the end of the quarter, or really even until the end of the year, but the trend, I think, has been set, and another record quarter in China is very likely now. And Tesla stock closed 7.69% higher today. Earlier, Elon said the hardware 4 software will lag hardware 3 by at least another 6 months. So it came as a surprise to many when Tesla just released FSD beta on all hardware 4 Teslas in North America. I think many interpreted this as hardware 4 will not have FSD beta for another 6 months or so, but in reality, I think Elon just meant that FSD beta on hardware 4 is just not going to be as smooth and as good as on hardware 3, at least for now. James thought that hardware 4 vehicle owners will get FSD version 12 about 6 months after cars with hardware 3, but I don't think Elon said anything about version 12 in that earlier tweet, so I would have to agree with Omar that all this simply meant was that performance may not be as good, but I think Full Self-Driving version 12 will come out on hardware 4, maybe not at the same time, but I don't think there will be a delay of 6 months. But the performance is just not going to be as good. I could be wrong on this, but that's my position at the moment. Elon Musk and Mark Zuckerberg are heading to Capitol Hill next month for Senate Majority Leader Chuck Schumer's first AI Inside Forum. Maybe this will be the fight between Mark Zuckerberg and Elon Musk that everyone has been waiting for. The refresh Model 3 has just been spotted being tested in Germany. I say this is good news because probably it will also be produced in Berlin as well. I'm not sure if it will be produced immediately when the refresh Model 3 launches, but eventually I'm pretty sure it will be produced in Germany as well. Tesla Chan says that this specific vehicle though is from Giga Shanghai, which indicates to us that maybe it won't be produced in Giga Berlin very quickly, but if it was, that would be great news. At first, this looks like bad news to us Tesla stock investors, but let me explain why it's actually not. GM's autonomous vehicle division Cruise is set to deploy a small fleet of vehicles on the streets of Seattle, Washington. Let's not forget that this just happened about a week ago, where Cruise has agreed to reduce its fleet of self-driving taxis in San Francisco by 50% following an intervention by state authorities. They just simply need to put these vehicles somewhere else. This is all it is. Toyota has suspended operations at a dozen vehicle assembly plants in Japan from Tuesday morning due to system failure, a company spokesperson said. So not only are they struggling with the EV transition, they are struggling with just regular production here. The outage is due to a failure in the system for managing parts orders that has prevented Toyota from securing parts needed for production. There's this report that was published by Waymo earlier about its full self-driving, And James made some comments with which I fully agree. For Tesla FSD to be truly autonomous, they will need to emulate this sort of performance from Waymo. In this report, Waymo reported 18 collisions per 6.1 million autonomous miles driven. It took Waymo 21 months to generate this data between 2019 and 2020. Data was collected with a human sitting in the driver's seat to supervise the vehicle. By the end of 2023, Tesla will have approximately 2 million vehicles operating with hardware 3 and 4 in the US alone. Assume each car drives on average 10 miles a day across the fleet, and assume that on any given day, 10% of the fleet is driving. Tesla could generate 6 million autonomous miles in 3 days. If Tesla can solve the technological challenge, everything will happen fast. Data will be collected fast. And even if it takes the regulators time to review and approve Tesla's submission, that is irrelevant because people won't wait for the approval before buying FSD, and Tesla won't wait for the approval before pricing a fully autonomous software appropriately. About a year ago, James was very skeptical about full self-driving, but now he has become a lot more bullish. Over time, you will see more and more people flip. Redwood Materials, founded by Tesla co-founder and current board member JB Straubel, announced today it raised $1 billion in a Series D investment round. That's pretty good. I think JB is going to be pretty successful with this company, and maybe Tesla one day will acquire the company, and if we need to have a good CEO, I think JB is going to make a good one. After all, he co-founded Tesla together with Elon Musk. This is one major reason why I personally like Tesla cutting prices further instead of advertising, because Tesla is collecting a lot of data from its vehicles and competitors are not. All of the big automakers, they are not good technologically, and they are not really going to even seriously try, I think, to develop full self-driving technology similar to Tesla's. But there are quite a few small startups that are trying to emulate Tesla's approach to some extent. And if we allow the industry to have huge margins, 20%, 30%, maybe even higher, let's say, if Tesla achieved these higher margins, that just makes it so much easier for all these other smaller companies to get into this industry as well, including bigger companies that are tech companies but not auto companies, for example, Google and Apple and maybe a few others as well. They are not even trying to make a car. But if the margin stayed really high, why wouldn't they? But if Tesla solves full self-driving first, we scale, and then we start advertising, and then margins on hardware improve because of so much more demand, then, I mean, it's already too late for them anyway, because Tesla by then will have sold full self-driving years earlier, and Tesla will be a clear winner at that point, which will make it very difficult to compete. If you want to compete against Tesla, there will never be a better time than now, and right now is incredibly difficult, really. If you wanted to compete with Tesla, you should have done that 5 or 10 years ago. Now it's a bit too late. A company like BYD is not even trying really to solve autonomy. It's only these companies that have no car fleets that are really trying to do it. For example, Waymo's current fleet consists of about 200 cars in San Francisco. This was as of June of this year. Tesla has 5 million cars. Twitter/X will release an app for use in Teslas. I think many Tesla owners will really appreciate that. This is a tweet from yesterday. VinFast became the world's third most valuable automaker today. So yesterday, after its stock rallied another 20%, despite the company having only sold a little more than 100 cars in America, it now has a market cap of $191 billion, more than Ford, GM, and Volkswagen combined. Even Sawyer said, WTF. However, today the stock is falling and it's down 34% as I'm recording this. I mentioned this before that I think it's a bubble, and I was tempted to short it, but shorting is very dangerous. You have to time it extremely carefully, so I'm not going to do it, but if you can time it, I think you will make a lot of money. Unless it just suddenly goes another 100% higher from here, then you will lose everything. So be careful, but I definitely think it's a bubble, and eventually this will probably end very badly to those who have just invested their money into this stock. I am staying far away from this stock. This is a story from Bloomberg. Electric cars pass a crucial tipping point in 23 countries. 5% of new car sales powered only by electricity. The trajectory laid out by these early adopters shows how EVs can surge from 5% to 25% of new cars in just 4 years. Traditionally, once a country reaches 5% EV adoption rate, the rest follows very quickly. Tesla today said that to celebrate its 10th year anniversary after the first supercharger was opened in Europe, it will provide free supercharging to all cars in Europe. Not just Teslas, but to all EVs. Tesla is facing another class action lawsuit, this time over a free supercharging offer. The lawsuit was filed by Los Angeles resident Sean Cohen on July 21st, alleging that Tesla employed an online marketing strategy that led customers who purchased a Model S or a Model X between April 20th and June 30th to believe that they would receive the benefit of unlimited free supercharging with their new vehicles. The plaintiff argues that this promise influenced his decision to buy a Model X that he took delivery of on April 22nd, but for which he says he did not receive the free supercharging. Based on a review of the lawsuit by Drive Tesla, the discrepancy appears to arise from Cohen taking delivery of his Model X 2 days after the promotional period began, but purchasing the car prior to April 20th before the promotional period start date. The lawsuit only states the car was delivered on approximately April 22nd, but the terms and conditions of the offer clearly stated it only applied to customers who order and take delivery of a new Model S or Model X vehicle between April 20th and June 30th. Legally, I don't really understand why a lawyer would take this unless that lawyer wants to build a reputation for himself or trying to win unfair cases where he's the one that's being unfair, legally speaking, because clearly Tesla did not violate anything here. But the lawsuit asserts claims of fraud, unjust enrichment, and negligent misrepresentation under common law. Now, we can certainly make a case that Tesla here perhaps was a little bit not completely ethical, which is very different from not being legally in the right, because here's what I mean by that. When you take delivery of a vehicle, or right before you take delivery of a Tesla vehicle, you can reject your delivery. And in this case, the person could have rejected the vehicle, and then if he took delivery of another vehicle, as long as that vehicle was available to be delivered before June 30th, then yeah, he would have gotten all of the free supercharging miles, which he didn't. But legally, I don't think you can really win this case because it very clearly says you have to order and take delivery of the vehicle between this period. It's not just enough to have had ordered the vehicle way before this period and then take delivery of the vehicle during this period. Tesla usually does this when Tesla wants to clear out the inventory before the quarter ends to boost deliveries. In other words, you would pretty much have to take a vehicle from the inventory. If you custom ordered the vehicle, yeah, it's probably not really enough time, depending on your configuration and which vehicle you are ordering. So once you consider all of that, then maybe Tesla is not really being that unethical as long as it was made clear that you are not getting the free supercharging. But if you reject the delivery now and you don't want this particular vehicle, which by the way we will put back in inventory and it's probably going to disappear before you can even order that particular vehicle. So just look at our inventory right now and see if there are any other vehicles that you want. If that was made clear, then I don't see any ethical issues with this at all. So there's quite a bit of nuance here, but legally speaking, I think this is pretty black and white. Just ethically speaking, this is a bit more nuanced. This picture created a lot of questions. What is going on with this door? Someone said this could be adhesive from film collecting dirt. And there's another Cybertruck, or maybe the same one, that has a similar thing going on. And I think most likely it is from crash testing. So one possible conclusion from all of this is, if you ever happen to crash your Cybertruck, it will just look dirty. So instead of going to a repair shop, you will just need to visit a paint shop. Yesterday, I talked about how people don't stop at stop signs, but this is just wow. There's a stop sign there, and this car in the front did not even attempt to even slow down a tiny little bit. It just ran through the stop sign. In the meantime, full self-driving beta stopped completely. This could be a fairly decent ad, actually, if Tesla was to advertise. A US startup claims its cameras work better than LiDAR on cars. Elon Musk says, no way, of course, he's being a little bit sarcastic here. Eventually, these automakers will figure it out, and they will understand that the LiDAR approach is doomed. Now that Tesla is using this new 10,000 Nvidia H100 cluster, I think some people don't really understand exactly how significant this is. For example, H100 is 9 times faster for AI training compute versus the A100. In other words, Tesla just increased its AI training compute 7-fold. And as Tesla stock is rocketing today, up about 6% as I'm recording this, the SpaceX rocket is getting ready for the next flight. As far as I can tell, today Tesla stock is up mostly because of much better deliveries in China than previously expected, as well as the market's doing fairly well today, but certainly it does not justify Tesla stock being 7.69% higher alone just based on the market's doing better. And it has nothing to do with version 12, and really, this is a bit sad. While deliveries are of course very important, especially in the long term, what's even more important is Tesla making this incredible full self-driving progress, but the market is not giving credit at all to Tesla. A lot of people will miss out on a lot of money because they did not buy more Tesla stock, is what I think. So that's why I say it's sad, but overall, personally, I'm actually quite happy because I can just keep buying Tesla stock at this cheap price. Yeah, more good news for Tesla. Tesla battery degradation is not accelerated by frequent supercharging, which was previously thought, according to an extensive new study. It has long been believed in the industry that frequent DC fast charging is bad for battery longevity. Even Tesla used to warn against it, but we have never seen strong data that support that assertion. In its most recent update about battery degradation, Tesla says that its vehicles lose only about 12% after 200,000 miles. A new report from Recurrent, which has access to data from over 12,500 Tesla vehicles in the US through its software service, now shows clearly that there's little to no difference in battery degradation between frequent fast charging and rare fast charging. Here's Model 3, and you can see fast charging here in this blue color and rare fast charging in this green color, and yeah, there's no difference really at all. Here's Model Y, also again, not statistically significant. If anything, you could say that fast charging actually is helping the Model Y in the end, although there were some periods right here where fast charging seemingly made the battery slightly worse for a short period of time. If you need to supercharge and you're worried about your battery, well, worry no more. Also, interestingly, the study was based on pretty extreme cases. We compared cars that fast charge at least 90% at the time to cars that fast charge less than 10% at the time. So seemingly, to me at least, this seems like a pretty strong conclusion based on this data, that fast charging does not really make your battery worse. Overall, today has been a great day for all investors, especially Tesla stock investors. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.